CIMB Group Holdings Investment Bank, CIMB Investment Bank, inked a deal earlier today to acquire KAF Equities from KAF Investment Bank, according to sources. KAF Equities, formerly known as KAF Seagroat and Campbell, is one of the oldest stockbroking firms in the country. A sale and purchase agreement was inked at Menara Chulan today, where KAF IB is based, according to the source. Details of the deal are not immediately known, although sources say the valuation was between 1.3 times and 1.5 times price to book value. It should be noted that back in 2016, KAF Seagroat was privatized at a PVV of 1.38 times, or about 324 million ringgit. CIMB Group said that it was unable to comment at this juncture. KAF IB CEO Rohaiza Ismail could not immediately be reached for comment. CIMB Group already has a stockbroking business through CGS CIMB Securities, its joint venture with China Galaxy Securities Co., one of China's largest stockbrokers. However, it is widely known that CIMB Group and CGS will soon be ending their partnership, as CGS is expected to exercise a call option to take full control of CGS CIMB. The two parties may continue to collaborate in other ways. It is understood that CIMB Group is acquiring KAF Equities so that it will continue to have a Malaysian stockbroking business. While the stockbroking business is becoming increasingly competitive, CIMB Group is likely to want to keep having a stockbroking business for strategic reasons, namely complementing its wealth management and IB businesses. According to industry sources, several analysts from CGS CIMB will be leaving to join KAF Equities, which could be renamed CIMB Securities. Sources also say that Ruzi Rani Ajith, the CEO of CGS CIMB, has resigned and will end up heading KAF Equities. Analysts say KAF IB was likely willing to sell its stockbroking business to raise funds and focus on its yet-to-be-launched digital bank. The police busted the Planetrade investment fraud scheme with the arrest of 3 men and 6 women, including a director of the company who operated the scheme. Royal Malaysia Police Secretary Dato' Nur Sia Muhammad Saduddin said the mastermind of the scheme was charged under Section 420 of the Penal Code and Section 1371 of the Financial Services Act 2013, while the director of the company was charged under Section 109, read together with Section 420 of the Penal Code, according to Bernama. She said all of those who were arrested were locals, adding that 7 were released and would be made prosecution witnesses. In a statement, she said some of the suspects who were investors were victims of the scheme, who had acted as authorized introducers, meaning they received a commission for bringing in an investor. She said that since January 2021 to date, the Commercial Crime Investigation Department had received 92 police reports related to the investment fraud scheme, involving losses of 17.5 million ringgit. Nursia said the police had also frozen assets, including 27 bank accounts worth a total value of 700,533.47, seized 6 vehicles estimated to be worth 1,165,800, and 11 million shares in 4 related companies. Meanwhile, she also urged those who had fallen victim to the investment scheme to immediately come forward to file a police report. Earlier, the Malaysia International Humanitarian Organization claimed that about 300 victims were duped by the investment scheme had not filed a police report because they were threatened by certain parties that they would also be arrested and remanded. TC Services Vietnam Co., a subsidiary of Chong Motor Holdings, will no longer be the sole importer and distributor of completely built-up MG brand vehicles in Vietnam come in June. This follows the termination of the overseas distribution agreement effective from June 30th by SAIC Motor International Co. due to global strategic adjustments. In a boss filing, Tan Chong said it had received a notice of termination of the ODA but remains open to further discussion with SMIL to explore alternative business opportunities for mutual benefits in Vietnam. Among others, the ODA previously allowed TC Services to provide after-sales spare parts and after-sales services for CBU MG brand vehicles in Vietnam, including the appointment of dealers to perform these obligations and activities. SMIL is a wholly owned subsidiary of China's largest automobile company, SAIC Motor Corp, and is engaged in the automotive business, including but not limited to the sale of automobiles and relevant components. Betamek has partnered with Managed Pay Systems to incorporate solar energy utilization at its electronics products manufacturing facility in Rawang for a 25-year period. The Electronic Manufacturing Services Providers Unit signed an agreement for Managed Pay's unit to install, operate and maintain solar panels at its Rawang facility with a minimum capacity of 515.2 kilowatt peak. Betamek says this installation will reduce its electricity bill by 2.1 million to 2.7 million ringgit during the lifetime of the asset and marks the next step in its ESG agenda. Managing Director Mirza Made says the annual savings in electricity bills will range between 10.9% and 13.9%, which then can be channeled into other things such as its ongoing research and development activities. When in operation, it is estimated that the installed solar asset will generate 1/3 of the power demand in the Rawang facility. Under the solar power purchase agreement, Betamek will pay for the solar generated power based on electricity tariffs, which is a 30% discount of the prevailing tariff rate. DRB-Hicom has clarified that the 32 billion expected investment in the development of the automotive high-tech valley in Tanjung Malim will not solely be from the project's main promoters, DRB-Hicom and Zhejiang Geely Holding Group Co. The group said that it is a collective investment that includes other foreign and local investors, Panama reports. DRB-Hicom said that Proton's plan to fully relocate its manufacturing facilities to Tanjung Malim by 2026 will also create a vibrant new city, boosting the domestic economy by attracting retail establishments to set up shops in the area. To recap, on April 1st, DRB-Hicom signed a heads of agreement with Geely in Beijing regarding the development of an automotive industry hub in Tanjung Malim, Perak. DRB-Hicom said it believes that the development of the AHTV is the right move forward for Malaysia in the new automotive technology space, and that the inclusion of multiple global investors augurs well for the domestic industry and economy while adding value to the Malaysian automotive landscape.